Hi there, Justin here from sharepickers.com, and this is my Sunday stock pick, 28th of June 2015. It's Optimal Payments, ticker code OPAY, OPAY. So what do? Optimal Payments is a global provider of online and mobile payment processing services to thousands of merchants and millions of consumers. Market cap, 1.1 billion. Share price at the moment is £2.50. 12-month target, £3 or 20% upside. Now, I bought this company at £2.50, and I do expect like a little, short-term weakness, especially at the moment with the markets in a bit of turmoil because of the Greek debt problem going on. But I think this, it's a huge growth story. And these are the reasons why I think this, the reasons why I bought this company. First of all, they're in a fast-growing sector, the mobile payment processing sector. And I know a lot of people say, oh, Apple's got this sewn up. No, they haven't. Apple are on iPhone, Apple Pay pretty much dominates the iPhone market, of course. But the market for iPhones is not a majority market. The dominant sector of the mobile market is Android. And I think last estimates, looking at around about, worldwide, this is not in America, I think around about 78% of the world's population, smartphone population, are on Android phones. So around 20% is iPhones. So obviously a massive market in the Android sector. And it's estimated by 2019 the value of mobile-based payments will surpass $142 billion in the US alone, up from $50 billion currently. This total is only around 1% of the 16 trillion US consumer payments on the market. So it's nowhere near saturated and still further to go. Reason two, companies' aggressive growth ambitions. And I realize they're the company realize they're in a sector here where there's a lot of competition, and so they're trying to claim as much land grab here as possible. They've acquired 4 companies in the last 12 months. One, a bigger but major competitor, Skrill, for a reasonable 13.4 times earnings. The improved efficiency, generated by these acquisitions is evident here, and they think they'll make $40 million worth of synergy benefits. And according to Barclays, savings from the merger will help increase EBITDA to more than 160 million in 2017. There's also a lot of institutional investment at the rights issue to buy Skrill. Institutions subscribed to 3.297% of the company at $2.90 a share. And of course, right now we are at $2.50, so it's a discount to that. And I think it was there's also a rights issue, and I think it was like 5 shares for every 3 the current investors owned at 166. So also we've got reason 5, improving fundamentals. The revenue has always increased and is forecast to do so, as is their pre-tax profit and earnings per share growth. Now, there are a couple of competitors, but in fact, Monetize is not a competitor really, because they're into more institutions and banking systems. But Monetize still makes a loss. This company makes a profit, a good profit, and they have done for several years. They've also got a strong balance sheet. That's reason 6. They are highly cash generative, with group cash of 106.5 million last financial results, and reported free cash of approximately $44 million at their last reporting. Increased interest and liquidity. They're now on AIM at the moment, but they are in the process of moving to the full market, the London Stock Exchange, and they will be, at this market cap, a FTSE 250 company. So you've also got funds going into that, buying this company as a result of this. And the broker forecast, reason 8, the average price of the last 4 brokers' forecast is 421.75 pence. That is a 68% premium to where the share price is right now. So you can see a lot of, and these are big brokers, they're estimating the company is worth a lot more than it is at the moment. And like I said, at the moment, I think, short-term volatility in the markets because this Greek problem is an advantage, an opportunity to buy more. And I will buy more of this company because I do believe, like I said, they have an ambitious growth strategy and they want to be the number 1 player in this area. And, they've doubled their size and market cap in the last 12 months by this Skrill acquisition. So that's the financial side of it, and there are more details on this document. If you sign up to the newsletter, sharepickers.com, you can see the rest of this document, and I go into more detail on that, highlighting some of the financial results. But let's have a look at the chart. Okay, this is a 3-year chart of Optimal Pay, and as you can see, they've had quite a stratospheric rise from under £1. That was back in 2013, so it's taken, 2 years pretty much to five-fold increase in their share price, even more than that to the peak right up here. It's almost rising, and then all of a sudden this rise here. Let me zoom in on this section here. I'll show you. Let's zoom into a 1-year chart, and I can take you through this. So this is where they announced that a suspension. They announced the results, then they had a suspension on AIM because they wanted to point out or outline their acquisition intention for Skrill, which is, like I said, is a major competitor of theirs and pretty much a little bit bigger than them at the time, I think they were. So it's a bit of a reverse takeover. And so on the announcement of the results, shot up here crazily from £4 to £5. And then hit the stop. Then all of a sudden, this happened it's all good news from the results and the announcement of the acquisition, and it grinded down. And this gap down really was the rights issue there, and it's like I said, it's had problems bounding along here. It's hit its head on the £3 and it's grinded down. Now, why do I buy at 250? Because it seems obvious support there, and there's not. And I'd say on a technical level, I'm taking a bit of a risk here. So, I'm not going to say it's going to bounce from here, and especially at the moment where the market's in such a volatile times, turbulent times, it may go lower. I'm happy for that. To me, it's like having a sale at your local or your favourite, clothes shop. It's time to buy more, I think. And that's what I bought it at 250. Now, why do I think 250 is a good support level? First and foremost, technical analysis lends itself well to round figures, as in support resistance. Like you see, the £3 there has been a bit of a resistance level, and here you can see £5 as well. Always round figures, and also bouncing its head there on the £4 level a couple of times, and then pierced through there. So this is the only basis from which I'm using this support. Let's look at this chart there. I'll zoom in to a date range. By the way, it's the ADVFN chart. You can get these free if you sign up here and click below the link in the video. So let's go to September. Here we are, 2013. And as you can see, it popped through the 250 level here. It had a little bit of resistance, sat back on it, bounced back up again. And then all of a sudden came back down, sat on the 250 level, bounced back up towards £3. And you see 250 has provided quite a bit of support there back in September 2013. That is the only reason I think there'll be support at 250. It may go lower, and there may be support at £2, or even maybe around about here, which is, what's that, 230? So I'm taking a bit of a gamble, hoping that the 250 level will provide support. But apart from that, I can't see any other reason why it wouldn't go a little bit lower, especially, like I said, with the current market volatility. As you can see, the relative strength on the yearly chart dipped down here below, oversold, then came back up. That was obviously on the rights issue. And by the way, if you don't know what a rights issue is, essentially, the share capital, they issued more shares to the market. So, of course, that depletes the share capital. Expands the share capital there. And so it's grinded lower here. And I'm hoping, there's no sort of huge amount of relative strength. It's managed to keep above the 30 level, but it's dipping towards that again here. So, like I said, we may see a little more. Let's drag this out and I'll look at the MACD, see if there's any reason why this should drag it up. Oh, it's not working. I'm going to drag that up there. Drag this up. Oh yeah, drag that out. Drag that up there. Yeah, as you see, the MACDs there, they've converged there, so moving upwards, and the share price has drifted down. What we need is for these to cross the zero, really, to give it a bit more support. But, like I said, I wouldn't put my house on the fact that it won't go lower than 250, but it seems a support level, and if I zoom in, you can see a couple of days it's bounced off that support. Let me just drag this down again. Let's compress the RSI and the MACD if I can. I haven't got my mouse plugged in here, so it's at my all fingers and thumbs, which is obviously a good thing, having fingers and thumbs. Okay, so let's grab this up. As you can see, a couple of times it got near 250, bounced back up, near again here, but it broke that support there, which is around 260, I suppose. came down. But look, tested the area below 250, came back up again. Tested the area below 250, came back up. Tested again here, came back up. And I'm hoping this year, sitting on 250, it'll bounce off this. It's a big hope, you know? But who knows? But anyway, fundamentally, what I'm saying is it's a good long-term investment I'm believing. And like I said, with all my stock picks, minimum time I hold them for is 12 months, unless there's lack of transparency with the company. I mean, I have sold one company, it's Blur Group, but to me, you know, I didn't trust the financial reporting, and so I decided to back out. But generally, I hold my stocks that I pick on the Sunday stock picks for a minimum of 12 months. So that's OPAY. Or optimal payments. OPAY is a ticker. Now, you know, looking further, base any decision that you make investment-wise on what I've done here. Please use that as a stepping stone for your research. But in my mind, I believe this is a company that's good for a long-term growth story. They're very aggressive in that area. And like I said, this sector is a hugely growing sector, the mobile payments sector. So that's OPAY, and that's it for me. Hope that helped you in some way. And don't forget, for more information, sign up to my newsletter at sharepickers.com. Speak soon.